Jeremy, huge day, stock, huge gains. Congratulations. It's always hard to get this really off the ground. Do you feel like you left a lot of money now on the table?
Look, I think we're very, very happy to be becoming a public company today. This has been part of the journey that we've been on. We're thrilled to have so much investor interest in the company. Yeah, we executed, I think, a really great roadshow and found that across every sector, from major mutual funds to long onlys to family offices, hedge funds, sovereigns, retail, across the board, there's a lot of interest in investing in stablecoin platforms and networks like Circle. And so it's been a tremendous day, very proud moment for all of us here at Circle.
What are you going to use the money to expand for?
Well, Circle has grown quite a bit over the last several years. We're profitable and generating cash, and so there is a component of cash in this IPO. We're in a period where we're going from the early adopter phase of this technology to the mainstream scaling phase. And as we go into that mainstream scaling phase, there's extraordinary opportunities to grow and expand internationally. We're building many new products, kind of building more infrastructure that's necessary to get ready for large-scale internet companies, commerce firms, banks, building on this. We're building new products that really try to make this an easier to use technology for everyday payments. And so we've got product investments, we've got growth expansion. There's a lot to do. And I think this really represents the internet kind of colliding with one of the largest markets that's ever existed. And we're part of building this new internet-based financial system, which is one of the largest target markets that the internet has really ever gone after.
As you start to do that, there's been a lot of discussion here about new entrants into that space. And I don't necessarily mean startups. I mean the big sort of tech companies out there, as well as some of the big financial institutions that might decide to go the stablecoin route in some shape or form themselves.
Well, we really do think that major technology firms, major financial institutions, major commerce firms are going to go the stablecoin route. And we think that they're going to look to partner with the leading platforms and the leading infrastructure that can bring the technology, the scale, the network effects, and really the broad regulatory footprint like Circle has provided. We are one of the most widely licensed and regulated firms in our space. As you know, there is a bill in Congress with super majority support in the Senate, the Genius Act. And I think as these things come to pass, that's going to create real demand to build with internet platform infrastructure companies like Circle. So we really are excited about all those firms getting into this because it's a tremendous opportunity for us to work with so many of those companies.
And part of that debate as well, Jeremy, as you know, and I'm just playing devil's advocate here, is of course the question as to why we necessarily need the tokenization through a stablecoin or through, I guess, a money market type of fund, if you will, rather than just doing some type of tokenization right off of people's bank accounts.
Well, one of the core tenets behind what we do is issuing a fully reserved digital dollar or dollar digital currency, full reserve money that can work at the speed and velocity of the internet at scale is so key. We don't want the base layer of money on the internet to be fractionally reserved. We don't want credit IOU risk in the money that is free circulating on the internet. And so we think from a monetary perspective, from a safety soundness perspective, we need this ultra safe form of digital cash money. And that's why central banks and prudential regulators all around the world agree with that. That's why the rule books that are being put in place enshrine in law that safety in these digital cash instruments. We think this is the right foundation for the internet financial system.
On that end, that makes sense in terms of safety. But if you're not FDIC insured, how can you really appeal to a broader array of individuals?
Well, one thing to remember is that banks are FDIC insured because they take 12x leverage with your deposits. They're huge risk-taking institutions, whereas a stablecoin under these rules, under things like the Genius Act, are only able to hold these high-quality liquid assets, ultra secure and safe, short-duration treasuries, treasury collateralized repo, the safest assets in the world. And of course, we do need to hold capital. We need to think about the market and liquidity risk of short-duration treasuries. But that's very, very different than a levered-up deposit base, which is why they have to hold 8% capital and why they have to participate in these insurance schemes. And so FDIC is really designed around risk-taking money. We want ultra-safe, very sound full reserve money as the foundation of the internet financial system. It's a step forward in the safety and soundness, I believe, and the ultimate efficiency of how money can work in the world.
I mean, maybe you already answered it, but a little bit to that point, why shouldn't we use tokenized bank deposits as the currency of the internet instead?
Well, I mean, policymakers and central bankers and all of those that are focused on this are focused on making sure that we have these digital cash instruments, things that can be treated as cash that don't have embedded risk. If we're circulating around bank credit risk all around the internet, that's actually terrifying. If we have this very high velocity money that literally can move at the speed of the internet with transaction costs at a fraction of a cent that can settle in a fraction of a second all around the world, we need these to be as safe as possible. That's why stablecoin money is such an innovation. It is effectively a new form of M1 electronic money. And we think the world is figuring that out. People, households, businesses, financial firms are all figuring out this is a better form of money. It's a money born of the internet age. That's what dollar digital currency represents. And we think it's the future of the financial system.
As that sort of expands, Jeremy, how are you going to address some of the issues with regards to fraud, criminal activity, some of the other things that we know that other parts of the crypto sphere, not necessarily stablecoins themselves, but of the crypto sphere that have arisen, and I know to some extent, at least prior to the current administration, were being addressed or trying to be addressed through regulation?
I mean, regulation around the adoption of this is happening all around the world. Every major government is putting in place regulatory regimes around intermediaries that are involved in working with digital currencies, working with blockchain technologies. Companies like Circle are really advancing the state of the art. We just recently launched Circle Payments Network, or CPN, which provides a trust and compliance layer for regulated financial intermediaries to use stablecoins as a settlement layer, but to do that with known entities involved in those transactions. So it's really being both baked into the regulation. The industry is developing, I think, important novel technologies, and we can do all of this while also improving privacy and security for people, which is a real issue. You think about the data thefts and the kind of honeypots of information that have plagued so many people and affected them with fraud in the existing financial system. We think we can improve on that by building on this open, transparent public infrastructure of blockchains.